Now, I'm hoping that you can give us an inside scoop as the property expert. You often hear about a few people finding a place where the property is really cheap and it turns out to be the best investment as the place absolutely booms. I think of Woodstock even, which is one of those places. So is there a way to identify a place that perhaps isn't the hip happening place at the moment, but could be in terms of property in the next 10 years?
Well, I guess you've asked the million-dollar question.
Yes, I have.
Everyone's after that answer. I'll tell you what I would suggest to the budding investor is when you're looking at property, there are two income streams as such. One is the cash return that you get monthly from the rental that you generate out of the asset. And the other one is the potential capital appreciation that you can get when you offload, when you sell that property. I think a lot of people really got burnt in 2007, 2008 because those dynamics had shifted. If you were able to buy a property, just to get a deed of sale through and take transfer round about that time, inevitably you made money because the market was moving so fast. What people learned the hard way is that if the prices go down and there's an oversupply, rentals can fall, prices can fall, you cannot even get a cash flow return that justifies you having made that investment. So my suggestion for people would be to invest into property where you have a very good cash return. So you make sure that you are earning 10 or 12% cash return. Even if the capital appreciation, the projection isn't as good as maybe buying somewhere else, you are guaranteed that return as such, and then there may be capital appreciation. Now, if you invest like that and you take a view 5 years down the line, you have minimized your risk of a downturn in your investments, and there is still upside potential. When you've invested for capital appreciation and the rental return doesn't materialize, you're digging a hole first that your capital appreciation needs to get you out of. So I know that doesn't give you an area specific, but what it does give you is areas where the rental returns are quite high, means that the prices are normally quite low, and normally will result in time those capital prices moving up. So if you get in and a good rental return, you have good upside potential. So that's my tip.